Amitava Mukherjee, Director Finance at NMDC, now joining in on the show. Great to have you on board. To begin with, how would you really view the overall global demand-supply situation post the Brazil disaster? Are we staring at a possibility of a significant scarcity of iron ore?
Well, the Vale disaster implications are still not very clear. The first hand it was 35 million ton, they'll take a cut. The latest estimates are around 70 million tons. So for Vale, considering that Brazil exports around 400 million tons, it's almost a little less than quarter, around 20% effect will be there in the global market. But now with China also scaling down their production because of their blue sky policy, again this month they have had a cut. So I think since the overall global market was in a surplus supply scenario, so I think there will be effect, but it will not be a scarcity, so as to say. We do not expect a huge scarcity. Availability will be there.
All right, availability will be there as of now, not a huge scarcity. But what about Chinese iron ore prices? They've continued to remain above $90. Do you think that, the pricing in the entire severity of the current situation, that is what has attributed to it, and where do you see the prices headed?
Yes, I think after the initial shock when it reached much higher than 90, around 95, now it has stabilized at around 90. It is going, our own estimations are that this is going to be there for about a month or so at least. In the near future, it is going to hover above 85, 90. That is the situation where the 65, FE65 would be there. I think more or less that is now the new level, internationally speaking. I think 85 plus would be reasonable to speculate, or reasonable level, considering that Vale can take a production cut up to 70 million ton, which is the latest news that's coming out of Brazil. 35 was the earlier cut that was confirmed.
But tell me, is NMDC in a position to try and capture some of the market?
Now, unfortunately, what is there in India is that our exports are pegged by the long-term contract that we have with Japan and South Korea. So our export quota is around 3 million tons. So we don't operate in the spot market, unfortunately, as of now. India exports around 12 to 20 million tons a year, and NMDC exports around 3 million tons a year. So we do not have the capacity right now, because for the evacuation from our mines to take advantage of this directly. And as you know, the export duty in India for the iron ore is around 30%, while the import duty is around 2.5%. So there is a conscious decision, a policy decision at the government level that exports are not exactly encouraged, because we have a lot of steel making capacity here. So the idea is to add value to the ore more domestically than rather export the ore and realize value from there. So that has been the government policy since long, and the duty structure is built around that policy. And since we are the only country which actually in the world which actually both produces ore and produces steel of more than 100 million ton, so the priority is obviously to domestic suppliers, to the supply to the domestic steel industry. That is the priority. If you see Australia, they export around 800 million tons, but they don't make that amount of steel. China, on the other hand, makes 900 million tons, but doesn't have that kind of ore. Japan makes around more than 100 million tons, but they don't have any ore for that matter. So India is a unique case in this global steel scenario, where we have the manufacturing capacity of more than 100 million ton, and ore production which is around currently I think around 210 million tons, which is speculated to go up to 225 million ton this financial year.
You've also undertaken a price hike after nearly 3 months of a sharp price cut consecutively. Is it the global shortage of iron ore post Vale that has prompted you to do so? And what is your outlook now on the prices?
Yeah, right. From, you see, we took 4 price cuts after September. That's 2 in December, 1 in January and 1 in early February. And then after Vale happened, and then the steel prices actually started looking up. Our domestic prices are more sort of tuned or calibrated to the steel prices rather than the international iron ore prices. As I have explained that we do not export, we do not go to the spot markets for sale. So our domestic prices are more calibrated towards the Indian steel market. And Indian steel market, if you see, from February onwards, there has been a 3 to 5% hike in different type of products in the domestic steel prices. HR coils have gone up by around 3%, around up to 44,000. TMT bar in Raipur has gone up by around 3% to around 36,000. Even sponge iron has gone up. So it has been calibrated to that. But SAIL has hiked a price of around 1,000 2 or 3 days back. So since there has been an upswing on the steel prices in the month of February and in the month of now it's looking up. So we have also followed the steel prices. Our prices are generally, they follow the steel prices either up or down.
So what is the price differential now between NMDC and foreign iron ore pricing?
You see, in the western coast, you have to understand the logistical problem that we have. You know, if I evacuate my ore from our Chhattisgarh vicinity, it takes me around $19 to reach the port at Vizag. And you add $2 for the port handling charges and another $7 for taking it by ship to the western coast. So the price neutral point at western coast would, for international prices, would be around $70, provided we are selling at around $3,000. Now we are at 3,000 rupees. So that's around $40. As of now, our prices at Bailadila sector are slightly less than 3,000. So unless the prices fall below $70 in the international market, or rather 65, around 65 at our current NMDC prices, we will be cheaper still at the western coast. And at the eastern coast, of course, we will be cheaper. The prices will have to fall, the international prices will have to fall below 60 for us to make our ore at the current prices more expensive than the foreign imports. We have a substantial, what you call is the cost of logistics. Logistics cost in India is fairly high as compared to the international market.
You're headed on pricing, but thanks so much then for joining in and giving us an overall update on how things are shaping up for the business, the overall outlook on iron ore supply, as well as whether or not prices are on their way up from here.